and welcome to this special CNBC TV18 show. It's earnings season and we are here with our curtain raiser. QSQT or quarter se quarter tak. I'm Lata Venkatesh with my colleague Prashant Nair. Hi Prashant.
Lata, hi. Over the next half hour, we will detail what brokerages are expecting in terms of earnings in the second quarter. We will also closely analyze key sectors, the big ones, IT, autos, FMCG, banks, NBFC and more.
Yes, Prashant, that's right. We are at the start of the third quarter and once again the familiar questions are going to be asked. The questions that come to the fore firstly will be, is this going to be the quarter when the Nifty will finally move from a flat performance to at least a high single-digit kind of earnings growth? The second question we are asking, which will be the companies that will deliver on earnings and which will not? And finally, what should investors watch out for in terms of guidance for the fourth quarter and for FY20? And well, to precisely do all that, we have with us our guests as well. Joining us to discuss this and more, we have with us Gautam Dugad, Head of Research Institutional Equities at Motilal Oswal Financial Services, Sanjeev Bhasin, Executive VP Markets, and Nischal Maheshwari, the CEO Institutional Equities at Centrum Broking. Gentlemen, thank you very much for joining me. But first up, I think we have to get an overall view of what the earnings scene will look like.
Absolutely, Lata. We have Sonal Sachdev, our Head of Research, standing by with a top-down, broad look at what kind of earnings growth should we expect, what are the big drivers for the growth that we are likely to see. Sonal, over to you.
The big trend in Q3 was the decline in crude prices, the softening of inflation, and the rupee firming up. The good news ends there. There were a range of weak cues. More recently, we've had the CSO come out with GDP estimates where they're looking at 6.8% growth in the second half, vis-a-vis 7.6% growth in the first half. Earlier, we had CMIE come out with numbers showing that investments are at a 14-year low in the last quarter. We've had a bad festive season. We've had auto inventories sort of pile up. There have been food disinflation, and therefore farmer woes, and that might impact rural consumption. We've had issues with the IL&FS, so that led to the entire liquidity crisis. That's hurt NBFCs, it's hurt real estate companies, and while banks might be a bright spot this quarter with a lot of loans having been written off, bad loans having been written off, and an opportunity with the NBFC crisis, they also might need to take a little bit of a hit this quarter with the IL&FS not getting a special dispensation. So all round largely negative. Even metals and cement might see a partial impact of user industries having slowing down. So all in all, not really a very rosy picture, and going in with sort of low expectations into the quarter. Motilal Oswal for the Nifty, public sector banks and OMCs has a growth expectation of 10%, which is not something that will light up the markets, but even that would be fairly decent.
Okay, thank you very much. Okay, the big dissonance, of course, is going to be the NBFC problem, the disturbance in the debt markets, how much that may have affected consumption, and we already have seen it in the automobile numbers, the lead indicators of the third quarter. Let's go across to our guests. Gautam, our Head of Research, Sonal, referred to some earnings estimates of Motilal Oswal. What are you going with overall for, say, the entire universe of companies that you cover, and for the Nifty itself in terms of earnings growth in the third quarter and the full year?
Hi, Lata. So as far as this quarter goes, I think this is going to be another tepid / unexciting quarter as far as aggregates are concerned. We're estimating 2% profit growth for our Motilal Oswal universe and 8% for Nifty. But as always, there are certain factors which are, playing drawn to the numbers. If you look at OMCs, OMCs are going to have a big decline in profits on a YOY basis. So when I look at Nifty numbers excluding OMCs, it becomes a 20% growth number. But then at the same time, SBI is giving a big push. So SBI in the base had a loss of 2,400 crores. This quarter we are expecting around 5,000 crores of number. PSU banks in the past have had a very...
Go ahead please, Gautam. Go ahead, Gautam.
PSU banks have had a very different kind of a number. So all in all, if I look at Nifty excluding PSU bank and OMCs, I am looking at 8% to 10% kind of a profit growth. The same number for our Motilal Oswal Universal stocks excluding OMC and PSU bank will be 4%.
Okay, so that's essentially top-down broad look at what to watch out for as far as this earnings season is concerned. Let's dive into straight sectors. We always kick things off with the IT sector. Will be one of the first large sectors to see earnings come out of. Reema Chandulkar, our IT specialist, is standing by with a quick run through of what to expect. Reema.
This is a seasonally weak quarter for the IT sector given the year-end furloughs, but deal wins have been strong and we've seen an improvement in the demand environment for BFS as well as retail. So numbers this quarter will look better than what we saw last year and growth this time will be led by HCL Technology. Full year guidance, Infy could up the revenue guidance, hold on to the margin guidance. HCL Technology will hold on to its revenue guidance of 10 to 12% according to our poll. The key to track will be the outlook for the next year given the uncertain macro environment with trade talk, Brexit, etc. And plus the rupee has started appreciating, so how the companies will hold on to their margins, especially given the on-site cost structure seems to be rising, will be tracked closely as well.
Okay, got that, Reema. Let's get to Sanjeev. Sanjeev, what would you do with the IT piece? What should people watch out for, one? And where would you place your pre-earnings bets on?
Yeah, hi. So Lata, I think it will be a reasonable quarter for IT, given that, we make too much about the rupee being a tailwind or a headwind. I think they are mostly hedged and rupee weakness or strength may not play out. It will be a status quo as that goes. So we think treasury profit will be the one which will be key, but we think that in the large cap TCS could be outperform. However, we think Infosys is a dark horse given that they've been guiding very positively and some of their Europe-centric business may show a lot of return. So it will be TCS, Infosys and Mindtree in the mid-caps, which had a disastrous quarter last quarter, but this quarter we think some of the verticals may play out on the positive side. We think these three stocks could be relative outperformers on the earnings front.
Fair point. Sanjeev, we'll come back to you with more questions. Actually, let us take one more sector before we go to our other guests. Banks. Abhishek Kothari is here with the key expectations from the entire sector. Abhishek.
Q3 FY19 could be one of the best quarters for Indian commercial banks in terms of the loan growth as well as the earnings growth. Now the loan growth, which has come in at 15% as on the third week of December 2018, is one of the highest in last many years. You look at the slippages trend, that has been coming down and is expected to come down even in this quarter. The bond yield has been a key factor in this quarter. Now the bond yields have declined from the levels of 8.2 to about 7.5, 7.3 range. So that should aid in lower provisions and higher mark-to-market gains. So this means that the top line growth will actually remain on the healthier side, given that there is loan growth and there is lower provision. In fact, there is an earnings, mark-to-market gains that we can see on the treasury portfolio. So we could see first time net profit reported by Indian commercial banks after 4 quarters of net losses that they have reported in 2018.
Abhishek, thanks very much for that. Let's take it to our guests. Nischal is with us. Nischal, you heard Abhishek previewing what to expect as far as banks go. What would you say? Strong numbers from private banks and maybe some recovery in PSU banks as well?
Prashant, unfortunately my audio was not on. I couldn't hear what Abhishek was saying, but let me tell you my views about what I see in the BFSI space. So definitely I think this time BFSI is going to be a very clear banking versus the NBFC space, and BFSI in banking is going to do pretty well, especially the corporate banks based on loan growth as well as recovery in the bond portfolio. So this is going to be 2 legs basically where this corporate banks would be running, and they are going to show stellar numbers there. On the contrast, basically NBFC space is going to be much challenged, definitely because of growth, and though their cost of capital would have come down a bit, but I think they would be challenged for growth. So I think that is kind of a contrast we're going to see in the NBFC, in the BFSI space this time.
Okay, actually, let us discuss NBFCs separately and stick to banks. Gautam, what do you think? All of you all are betting big on banks, but those 40 power companies have not been resolved. They may have to be provided for. I don't know how many banks provided adequately for that. And IL&FS, are you sure banks are going to deliver? There is so much expectation pinned on them.
Lata, yes, there is a lot of expectations pinned on banks, and in 2019 it becomes very important because the rest of the sectors are faltering one after the other, be it auto, be it NBFC, be it commodities. So banks become a very crucial piece in the entire cog of wheel. Now, what we are expecting for the quarter is a 25% growth in private banks. We are also expecting PSU banks to benefit because of the fall in bond yields and also some recovery that we have seen and slippages moderation. Now, having said that, there are two uncertainties which we have articulated, over which nobody has any clue. We'll have to wait and see how banks manage that headwind. But for the moment, we are still, it's a preference that we've had for some time now. We continue to like the private corporate banks. This is where we think there will be some bang for the buck in 2019. And as pricing power comes back to bank, plus you have a credit growth which is going up, and obviously some credit cost normalization that you will see in 2019. So banks will be one of the important part of the equation in 2019.
Okay, so that is the view as far as banks go. Gautam betting that there would be strong numbers from private banks and maybe PSU banks, barring a few, return back to profitability. We take a very quick break here, our first on this show, but when we return, we tell you what are the expectations from autos, capital goods, FMCG, pharmaceuticals, lots of big ones lined up. We are back in a jiffy. Welcome back. You're with us here on our earnings special quarter se quarter tak. We took you through some of the big sectors in the segment gone by, and we continue our focus on other big sectors here as well. The FMCG sector is going to be another big one. Mangalam Malu is standing by to set up expectations and what to really look forward to. Mangalam, over to you. FMCG.
For the consumer sector, this quarter I'll be watching out for price-led growth, primarily because the volume-led growth would be impacted by a high base. Q3 FY18, the volumes for all the companies grew much higher because Q3 FY17 was the demonetization quarter. Important to also watch out for gross margins. They may compress owing to some high-price inventory which has been followed on in the third quarter. But the top line would also be impacted by some festive season shift which has come into this quarter. The biggest beneficiaries of that would be the likes of Asian Paints, Dabur, Britannia, 11 to 13% volume growth seen there, while Marico, Hindustan Unilever, Godrej Consumer seeing volume growth of anywhere between 6 to 9%. ITC, cigarette volume remains key, 6% is what the street is working with.
Okay, thanks for that very neat summary, and let's get back to our experts. Nischal, what would you pick in the FMCG pack? As a pack, will it deliver? Which ones will deliver there?
So I think as far as FMCG is concerned, I think the consumer space, especially on the front of the rural side, I think those are the spaces which we are favorable towards. So a lever is our top pick basically out there. We continue to believe that given the current situation, and we have seen so many of the states having a loan waiver and then a new general election around the corner. So I think that's a space basically which we like. So lever continues to remain our top pick in the FMCG.
Gautam, what would you like there?
Prashant, this quarter it should be slight deceleration given the high base that we are sitting on. So our expectation is 10% growth, and preference has not changed for us. We have been bullish towards Lever, Titan, Britannia, and Pidilite. Incrementally, we are liking Marico more since the last couple of months, ever since Copra went into deflation cycle. But this sector faces a problem of expensive valuation, so one has to be extremely choosy there. The framework that we have is stocks where there is some earnings visibility, volume growth, and that is where I think Lever and Britannia score over other companies in the space. Plus, they have a margin tailwinds also, and the execution track record has been phenomenal for the last 3-4 years.
All right. Well, with that, let's get to the next consumption basket, auto sector. Our in-house expert, Sonia Shenoy, is not with us. So Nimesh standing in for her. Nimesh, tell us, what should we expect from that sector?
Expect a subdued quarter for autos, both in terms of volumes as well as margins. Margins will take a hit across the board for most of the OEMs on the back of higher insurance costs, on the back of higher interest rates, and liquidity crunch for the NBFC sector. So across the board, Street is penciling in the single-digit volume growth for OEMs in Q3. As far as individual companies, Maruti is expected to take a hit of close to 270 basis points in terms of margin contraction, and for Hero Honda, Motilal Oswal is expecting a margin contraction of close to 160 basis points.
Okay, I mean, volumes have contracted. Now, the thing to watch is whether, we'll have some negative play on operating leverage. We start to see it already. Margins, how will they fare? Sanjeev, why don't you come in here? Autos, what should we expect? And what would be the big ones in terms of disappointing numbers?
Well, we've seen the auto numbers and we think there will be disappointment there, but that's more or less reflected in the price. Standout performer could be a company like Escorts, where we think the tractor volumes will add more margin, and the low base effect, meaning that input costs have definitely fallen. So Escorts would be a star outperformer. We also think that the crude derivative fall will definitely aid the tire companies, and even though volume may be slightly lower, but margins may have expanded for the likes of Apollo Tyre and MRF. On the LCV, MCV, we think disappointment is already evident in the numbers of Ashok Leyland. But as a rare grad at this 90-95, I think most of the weakness may have been priced in. We think before the budget there could be a smart rally or a lot of inventory being released in the month of January.
Okay, thanks for that. Well, actually, Gautam, your Motilal Oswal has long been a champion of some of the two-wheelers. Not a very pleasant quarter. Do you think this is the time to buy, or would you look for some further direction before you plunge into this sector?
Hi, Lata. See, auto, what is happening right now is there are several factors which have come together and impacted the volume growth. So near term, I have no idea where the volume numbers would be, but I think CY18 has seen broadly 25 to 27% market cap correction across the sector. And this is a time where I would try and look for, buying ideas in the space, while knowing fully well that next couple of months could be an issue. And we've seen broad-based earnings downgrade in this space, whether it's two-wheeler, four-wheeler, even auto comps for that matter. Our preference within auto space has been four-wheelers, and our top ideas in that space is Maruti and M&M. And in the auto comp, we'd like Madan Sumi. I would be very interested in looking at Eicher, tracking its monthly numbers, because the price is now corrected significantly and the stock has given virtually no return for last 3 years. But there is no rush to go in and buy two-wheelers at this stage, because the competitive intensity has gone up in that space and pricing power has moderated to an extent.
Nischal, you want to weigh in on autos?
So autos, I think, has been fairly disappointing if you look at the numbers and all. I agree with Gautam basically saying there is no rush to actually get into the auto space. The only bright spot out there is the tractor business basically, which continues to do well, and I believe that it will continue to do well, given that loan waivers and government's focus, the election year being there. So I think that's the one basically one should look at it, and if you want to still push your luck basically, then maybe Bajaj Auto is the other one which we like because of its exports business. Around 40% of its revenues come from exports, so I think that looks interesting.
Fair point. I think we have to rush it with two more sectors before we get into a break. So let's get Anisha on capital goods and industrials.
Well, the pace of execution is expected to remain strong for capital goods companies, and that's why we're working with a double-digit growth on the top line. As far as the order inflow is concerned, that has been a bit muted, as well as we saw a high base last year, and that's why we might be seeing a decline for some of the order inflows for some of the companies. And that is especially the case for L&T, where analysts are working with a 25% decline, and in fact, they see a risk to the order inflow guidance for FY19 itself. The most important bit, however, is the management commentary this quarter regarding the green shoots that we have been seeing in the capex recovery. Moving on to the road sector, wherein the concerns regarding the financial closures that we had seen earlier in the year have actually receded, but it's the order inflow that from NHAI that has remained muted this quarter. Though the state ordering activity has remained decent, so we'll watch out for the ordering number. And as far as the execution is concerned, that has remained steady, and that's why we are working with a 10 to 15% growth on the top line for road companies.
Nisha, thank you very much for that. Gautam, which segment should investors really focus on when we say infra industrials? Roads, perhaps, as far as infra goes?
Yeah, roads have been doing well, both in terms of order book as well as execution for the last 3-4 years now. The pace of execution has been excellent, but it may face some uncertainty as we get into the election cycle, and given the political uncertainty which is there in the background, I would be very cautious in this space. While everybody is talking about a revival in capex and possibility of some pickup there, the data which has come out recently has not been very, healthy in that sense. So while L&T remains a ubiquitous buy and there in every portfolio out there, but aside of L&T, it's very tough to find ideas in the space. For the quarter, we are expecting around 16-17% profit growth for our universe. Barring L&T, maybe Cummins and Thermax is something where we will go into. We don't track a lot of deep cyclicals or construction plays yet, but within the capital goods space, that's what our view is.
Okay. Well, let's get to the pharma sector as well, and then come with more questions. Ekta, what should we expect?
Well, for pharmaceutical companies in Q3 FY19, expect the US price pressure to probably ease into going into this quarter as well. India growth is expected to probably be robust but shy of double digits. Some companies such as Aurobindo and Cadila will benefit from key drug launches. For Aurobindo, Ertapenem, which is an antibiotic; for Cadila, Tamiflu generic. Margin improvement of key companies such as Lupin as well as Sun Pharma will be closely watched, especially because of higher marketing expenditure, and commentary on pending regulatory issues such as Dr. Reddy's Dovara facility as well as key drugs Nuvaring as well as Suboxone will be closely watched.
Okay, thank you, Ekta. Nischal, what's your pick of the pack in pharma?
So pharma, I think this quarter is going to be, robust growth as far as the domestic market is concerned. And there, I think we continue to believe that Sun continues to do pretty well. And given that there is a
earnings season is concerned. Many thanks for staying with us. We're going to be back with part 2.